Sales are down, prices are down, and new listings just fell off a cliff. And somehow, that last one might be the most important number in the entire February report. Because what happens when fewer sellers show up but the buyers are still circling? That's a setup. And if you're not paying attention to it, you're going to miss the opportunity. Let's break it down. I'm Chris Cucoch from LePage Signature, and I run a real estate team in the Toronto West and Mississauga areas. So if you are ready and you'd like to book a quick discovery call with me, there's a link in my bio. All right, February 26 numbers just dropped from TRREB, so let's talk about what actually happened out there. 3,868 sales across the GTA. That's 6.3% down compared to last February. Not a collapse and not a crisis, but clearly buyers are still hesitant. Average selling price came in at $1,008,968, which is down 7.1% year over year. So we're officially below $1 million on the average if you strip out the rounding. That's a psychological level. People notice that. Now here's where it gets interesting. In new listings, only 10,705 came to market, which is down 17.7% from last February. Read that again. Sales dropped 6%. Listings dropped almost 18%. Sellers are pulling back faster than buyers are. And when supply tightens while demand holds relatively steady, that changes the math. Everyone's been focused on price. Our price is falling. How much further will they go? And I totally get it. That's the number that hits your net worth. But the listing number is the leading indicator. It tells you about seller psychology. And right now, sellers are saying, I'm not giving it away. Ipsos polling backs this up. Listing intentions for 2026 are down. Fewer homeowners plan to sell this year compared to last. And you can see it in the data already. Active listings are sitting at 19,314. That's actually down 2.4% from last year. In a market where everyone keeps saying that there's too much inventory, inventory is actually shrinking. The sales to new listings ratio is trending at about 33.6%. That's still a buyer's market by most definitions. But here's the thing about these ratios. They move slowly and then all at once. If new listings keep declining through the spring while buyers step off the sideline, that ratio flips much faster than people expect. Let's look at how different segments are performing, because the GTA is not one market, it's several. Detached homes, 1,683 sales. Average price, $1,325,000, which is down 8.2% year over year. Detached is feeling the weight of higher mortgage rates more than anything else. Larger price points mean larger payments, and buyers are doing that math very carefully. Semi-detached, 336 sales at $1,027,000 on average, down 5.8%, holding up slightly better. That's your middle ground, buyers who want space but can't stretch to full detached. Next, the townhouses, 698 sales, $844,800 average price, down 7.2%. Similar story. And finally, the condos. This is the one everyone's watching. 1,088 sales at a $626,000 average price, down 8.8% year over year. Condos are getting hit the hardest right now. You've got investor sellers trying to exit, first-time buyers waiting for a better deal, and new completions adding supply. It's a triple headwind. But here's what I'd say about condos. When sentiment turns, and it always does, the entry-level stuff moves first. It's where the most pent-up demand sits. We're not there yet, but the conditions for a turn are building. Average listing days on the market is about 36 days. Last year, it was 27. That's a 33% increase. If you factor in relists and total property time on the market, it's 54 days versus 42. What does this tell you? It tells you pricing matters more than ever. If you're listing and you're not dialed in on your pricing strategy, you're going to sit. And when you sit, buyers read that as weakness. Then you're chasing the market down. The spread between what sellers want and what buyers will pay is still there, but it's narrowing. And that's actually a healthy sign. It means both sides are getting more realistic. We have to talk about this too because it's influencing buyer behavior right now. The trade uncertainty between Canada and the US is real. Tariff headlines are creating a wait-and-see posture for a lot of people, and not just in real estate, across the entire economy. GDP growth in Q4 2025 came out at negative 0.6%. Unemployment in Toronto is sitting at 7.9%. These are not numbers that make people feel confident about making the biggest purchase of their life. But here's the other side. The Bank of Canada overnight rate is at 2.3%, down significantly. Prime rate is 4.5%. Mortgage rates are still elevated, but the direction of travel on rates is down, not up. When the tariff picture clears, and at some point it will, you're going to have lower rates and pent-up demand releasing at the same time. That's the setup I keep coming back to. TRREB's chief information officer quoted a number this month, over 100,000 buyers holding off on a home purchase in the GTA. Now, do I think there's a neat spreadsheet somewhere with 100,000 names on it? No. That number is probably directional, but the underlying point is valid. Household formation hasn't stopped. Immigration hasn't stopped. People who wanted to buy in 2024 and 2025 didn't just disappear. They're renting, they're waiting, and they're watching rates and they're watching prices. And they're waiting for two things, according to TRREB: prices to stabilize and positive news on the trade front. Once these two boxes get checked, the floodgates don't open all at once, but the trickle becomes a current. If you're a buyer, this is a window. Not because prices are going to skyrocket tomorrow, but because you have negotiating power right now that you might not have in 6 months. Days on market are up, so sellers are motivated. You can take your time and make smart offers and negotiate. If you're a seller, strategy matters more now than at any time in the last 5 years. Pricing right on day one is not optional. The listings that are selling are the ones that are positioned correctly from the start. If you overshoot, you're burning your best days on market. If you're an investor, the math on condos is tough right now. Cash flow is tight. But if you're buying for the medium to long term and can get in at 8 or 9% below where things were a year ago, future you might thank present you. And if you're just watching, keep watching. But know that the markets don't ring a bell at the bottom. By the time everyone agrees it's safe to buy, the window has usually closed. If you're thinking about selling this spring and you want to know where you actually stand, this is not just a generic CMA, but a real look at your positioning, your pricing, and your timing. I put together something called the Strategic Listing Readiness Review. It's exactly what it sounds like. The link is in the description if you're interested. And if you're not quite there yet, but you're starting to think about it, I'd recommend my Thinking of Selling Start Here playlist. I'll link it right here. It walks you through everything you need to know before you even talk to an agent. Thanks for watching, guys. I'll see you in the next one.